The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. I hope I'm coming through okay. A few little technical difficulties. We'll get these taken out hopefully this morning. I just wanted to mention the reason why I was gone last week. I only planned on being gone on Monday, and the reason why Monday was so important was because of the fact that we were sitting at that spot on the NASDAQ that was so very, very important at 15,539. And, I spent a lot of time on Sunday and a lot of time, hold on one second, a lot of time on Monday before the market opened to get that thing, to line it up perfectly, because we knew we didn't have to risk very much if, in fact, it was going to hold that level. So that's what I was doing. Unfortunately, right after that, we had a situation where one of my very dear friends is on life support, and they were going to ask me to pull the plug, and I said I would, but fortunately he's still with us. Has nothing to do with the COVID. It's just a combination of living hard and boy, he sure did. But he's had a wonderful life. But 84 years old. Anyway, that was it. And then right after that, on Wednesday, I got hit with a big one, and that was the fires up in Oregon. One of my very closest friends, my closest friend before Byron, when Dennis moved up to Oregon 30-some years ago, when he retired, he's in the middle of that big fire up there, and I talked to him on 9 days ago, and he said, "Oh, the fire is only about 20 miles from us." I said, 20 miles? I said, "My God, you're in the middle of the forest." I said, "You got to get out of there." He said, "Well, we have a pretty good idea when to leave." And I've not been. The phone is gone dead. Everything's gone dead. Nobody knows where he is, and I've tried everything except going up there myself, and that's not an option. So that's been a little bit of a problem. But anyway, that's what's going on. Let's get to these markets. I posted the chart here of the DAX. As you can see, it's broken down quite a bit. By the way, I don't know if you folks know this or not, but the 22nd of September has worked 23 days in a row. In other words, it's been a bearish day 23 years in a row. Can you believe that? I mean, that's just an incredible figure. And it's certainly bearish so far today, but, we'll have to wait and see what's going to happen. But we do have a target down there in the NASDAQ with that big ABC that we talked about just about every day when I was on last week, and that has started to move down, towards that target. We'll see what's going on. Another one that's working really well, of course, is the euro. You remember just a few weeks ago when we were talking about the U.S. dollar, forming this, really important area where we had major support down there at that 91 and change, now exploded to the upside. In other words, the euro started to break to the downside. We had a high of 119 and change. It's now at 117 and change, and it looks like it's ready to break down below some serious support. Now, this could fade in a minute, but right now, that's what it's looking like. So the euro and the NASDAQ and the S&P, they're all moving in context of what we thought. Also, the gold is coming down near a very, very important level, folks. We just hit 1925. I don't know where it is right now, but that was a pretty significant number. And if we start going below that, we're going to be looking at 1850 in the gold. We posted that, of course, in the newsletter this week, because it's got actually the number is 1830. We'll get it up here and take a look at it. But it's had a very bearish bias all along, and we still got a chance to get down to that level, which I think will be one of the best buying opportunities. Someone said, "Would you kind of discuss your interpretation of the New York Stock Exchange weekly in my newsletter. Yes, I will. Just give me a second here, and I will get this up here, and we'll get it up here, and I will get this. And this is the New York Stock Exchange. And all I'm looking at here is the fact that you'll notice that the market has a tendency to rally for 23 weeks. You'll notice that it did it back in 2017, it did it in 2019, and it did it in 2020. That's all that is the fact that the market's repeating and repeating and repeating. That's all that means, and nothing more, nothing less. It's just a simple time count, and time counts work okay, but you have to also have a place to, enter the market, and that's where the ratios will come in to tell you whether they're doing. Remember, the ratios have more importance than the patterns, folks, because Einstein said mathematics precedes geometry. And he also said before God was numbers, and God does not play dice with the universe. So that's those are the things that I do watch the ratios, because those are the ones that you put your trade on, and those are the ones that protect you against it. That's why the ABCD pattern, is so very, very important. And today is really important, folks, because if we should get below that 170, let me give the number, below 10,000. If we get below 10,600 in the NASDAQ this morning, this will mean that we could be 3 standard deviations down from the high, and boy, that's where problems really arise. So let's keep that in mind as we look at that. But these things are starting to work that we're in. So let's just keep our fingers crossed, and maybe the trading gods will continue to bless us. But we'll do one thing at a time here. As far as the news, I have no idea. All I know is that the Chief Justice passed away, and that's going to be a big deal. Another one here. Let's get back to the markets. We're done with politics for today. Put this up here. Take a look here, folks. Take a look here at gee, I thought you knew that, Mr. Z. Okay, here is natural gas, folks. Natural gas doesn't look very good, folks. It's just been in a very, very severe break ever since we broke that 2.40 level that supposedly had some good support, and it didn't. And now you see where we are. We're at major support down here because we're below the 61% retracement of the low that we made back here on July 25th. So that's a pretty interesting phenomenon, the fact that this thing can't get out of its own way. It rallies 7, 8, 9 cents overnight, and then it gives it up right away. So that's not a very very bullish sign. So we'll want to watch these things as we go through. The key levels today, folks, is to watch the NASDAQ. If we get below 10,650, that would be a very, very negative sign. And other than that, it's been following perfectly. Look at the S&P here last night, folks. If you believe in patterns, look at this simple pattern here from the high last night to the low this morning. It's a perfect A, B, C, D. I mean, to within 1 point. But the key is, look at that Gartley right in the middle of the morning, where we rallied about an hour. We got up to 33.05. That was a 382 retracement of the high that we made on Sunday night. Okay, and then bada bing, bada boom, and you come down here. Now you can see why 32.45 is such an important number. So we'll watch it. 877-927-6648.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks, and I posted a link for the solar cycles from the Farmer's Almanac. I put a picture in the den here of what it looks like if you're looking at long-term solar cycles. Jerome was kind enough to send us the link, but it's very interesting to see, what's going on. I have a very funny story about about Benjamin Franklin's Farmer's Almanac. I was in the exchange on the exchange floor I was actually up in Barry Lynn's office. It was in the middle of August, and there was a reporter there from the Wall Street Journal trying to get some information on different stuff, and the beans were actually jumping around quite a bit, much like they're doing right now. And anybody had an idea of what was going to happen to the beans. And my aunt follows the Farmer's Almanac all the time. And one of the things in the Farmer's Almanac was the woolly caterpillar. When the woolly caterpillar had a very small coat, it meant that there was going to be a very, very mild and warm winter. And I said that would be negative to beans probably because they would be using less feed for the cattle. That's all I said. And by golly, in the Wall Street Journal the next day, they said floor trader at the Chicago Mercantile Exchange is talking about the warm winter coming and the potential for soybeans to sell off. I mean, honest to God, Byron still teases me about that. But that's what happened, and it actually worked. Fortunately, they didn't follow up on it. But anyway, those are just some of the crazy things that have happened to me over the long time here. So we'll watch it. Very, very key support down here because of the fact of where we're looking at here at the ABCD and this S&P. Overnight, there's really key support down in there because it's made some expansion numbers there, and also it's very oversold, as you already know. But how much of a rally now? If the market rally, let's just put this up here again so you can remind yourself, because these markets repeat over and over again. If you'll look up here, the last rally that we had rallied from 32.81. Up to 33.25, so you rallied 40 handles. That would take you up to 32.95 as a rally point today. Anything above 32.95 now could tell you that today is a major bottom of some kind. Okay, one other thing on a historical note that someone's asked me to talk about because it was in the book, Astro Cycles, A Trader's Viewpoint, and that's the Rosh Hashanah Yom Kippur cycle. That was given to me by Ira Epstein. He was on the floor. He had Ira Epstein Incorporated, and his father told me that his father told him that you buy on Rosh Hashanah and you sell on Yom Kippur, and those are lunar cycles, folks, right out of the Bible. So the theory is you buy on Shana Tovah, the New Year, and then you sell on the high holy day, which is Yom Kippur. The problem is it only works less than 49% of the time. The time that I tested it, it was doing a little bit better than that, but recently it hasn't really done very much. But it is a lunar cycle. I don't look at it at all. All I know is Larry Williams sent out something over the weekend that I got early this morning, and that is that September 22nd is the highest negative day over the past 23 years. It has been negative, and as you can see, it's negative here in the UK, also in Germany. So that's one other. Now, I wanted to take just a minute here to discuss George Soros and what he did in the British pound, because that was featured in the newsletter this week. A very interesting part. This is done by John Jameson, of course, and he was involved with that. But basically, if you think that George Soros, all he did was sell the British pound against the U.S. dollar, you're absolutely wrong. It was a very, very complex trade that he put on. He basically used the Italian lira, because he used the Italian lira. He bought the Italian lira. With that, he went in and he shorted the shorted the British pound through the Deutschmark. And this was back when the euro was just getting started. This was back in 1992. And everything worked perfectly. It was like a what do you call that thing when all the storms come together? A perfect storm. Everything came together. A black swan, or whatever you want to call it, and that's how he made the $1 billion in one day. The UK the federal guy at the UK, he wanted to keep the Treasury, the British pound in a trading range of about 3%. Well, they were not prepared if the British pound went below that 3% trading thing, and that's what happened. And that's what, that's what really happened. So we'll see what's going on with that. Anyway, that's what I thought. I'd bring that to your attention. But when you see these things, what they report in the news and what is actually happening is so far apart sometimes that you can't even imagine that they're that far apart. All right, now let's take a quick look here at the soybean market, because it has been rocking and rolling, folks. As we know, we want to thank Mr. Z for this one, because he has been on top of this like a cheap suit. I mean, he has, and it certainly wasn't been cheap, but you'll notice here that these beans have absolutely exploded. He is extremely bullish. Those, if you remember down there at around 860, 850, he was extremely bullish. And we had a Gartley there, and look what we've done. We've moved $2 a barrel, folks. $2 a barrel. Are you kidding me? How many days I've been on vacation? $2 a bushel. That's a huge move. That's that's pretty much what's happening in the NASDAQ. So those are some of the things that we're watching here today. So we'll keep a close eye on it. Marshall, how's the fires up there, buddy? Do you still have smoky up there in Washington, or is it cleared up a little bit? Some back report here, because I know some of these areas. San Luis Obispo is still very, very smoky, which has been 2.5 weeks now of smoke. So the air quality is extremely, extremely bad. So we want to let our friends know that, we got their back no matter what. It's clear in Spokane. The smoke is almost gone. That's good to hear. Okay, let's move on here. Thanks, Bob A., for checking in. One other one on the commodity market that we're watching here, and it could be just getting started, folks, that we've been sort of bullish on, and that is the wheat. You can see these areas of support that we had. The first one was 78% level. The second one was a 50% level. And now you see the ABCDs are expanding, and we're at real key level now in the wheat, because we had just hit the 78% level on that longer term chart. So there is a little bit of resistance up here in both the soybean oil, soybean meal, and in the wheat. Not so much in the soybeans, but the soybeans, the problem in the beans is related to China, folks, because China's had this terrible drought over there related to the Three Rivers, or the Three Dams. Three Gorges is what they call it, I think is what is the Three Gorges Dam, and that thing is all flooded and is a major problem. So they have to buy grain, because they got 1.3 billion people to feed. So whether that's going to mean much or not, I don't know. Please don't ask me about anything about the politics, because I have less interest in that than I do in baking a cake, and I don't know how to bake a cake, so I don't want to mess with that at all. I posted the chart of the silver. There's a chance we could get about another $1 lower in silver. That's going to be a really key 61% retracement should we get there. We'll take a little break here. 877-927-6648.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I'll talk about gold in just a second, but someone's asking me to talk about the NASDAQ and, why I took a day off to look at that. And if you look at this back on the 16th, you were watching a market that was trading at 11,539. That was exactly the same price that it traded at on the 10th. And that's why that was so important. And remember, this is a 4-hour, each one of these bars is 4 hours. So I figured that it had to happen sometime in the middle of the night on Sunday or early Monday, and I wanted to be able to spend time to send the video out to describe where to enter and not have to risk too much. So you have to risk about 20 points when you trade the NASDAQ from this level, and we were fortunate enough that it didn't come in close to the stop, but then it started to work. And so when I send these things out, when I send the videos out, I try to send them at least an hour early, but they have to go through the TFNN system, and sometimes they get out a little bit late, sometimes they get out a little bit early. And this one was so important that I really wanted to make it very, very important, because we had focused on the newsletter. John had focused on the newsletter here, the fact that we were at that one standard deviation there at 11,500, and anything below 11,600 would tell you that this market could still go higher. But if it didn't get there, then that's when the problem arises. And that's why if you look at this ABCD pattern that we're looking at here in the NASDAQ, looking at 99.27, we're trading at, 10,784 right now. So that's what we think we're going to get to. Now, that's not going to happen overnight, because the first ABCD move, we started on the 1st of September, and the B leg came in on the 11th. So, you're talking about 10 days. So you take 10 days down from the 26th or the 16th, that takes you out to the 26th. So that's where ideally, where the bottom would be, and that would be 26. I think that would be, let me see, when is Yom Kippur? Yom Kippur's on the 27th. So that's a Saturday and Sunday. So you'd be looking at around the 25th of the month, which would be this Friday. So we'll see if that's going to do. Now, should we get a rally here? I mentioned use the S&P, folks, because the NASDAQ it's a 1,000-pound gorilla. You don't get setups like this in the NASDAQ very often. I mean, that's why it was so very, very important. It hit it twice. That's the other reason why it was so very, very important. I mean, you just couldn't ask for a better setup. So that's neither here nor there. Okay, the second question that someone asked is about the euro. Why we added to the short position in the euro? The reason why is we had a big lead because we sold it right near the top. That's when the dollar index was trading at 91 and change, 91.65 or whatever it was. The euro was trading at 119 and change, and it certainly started moving. Now it's two handles under that. So that's a sign that it was starting to break, and all we got was a nice 61% Gartley pullback, and the risk was extremely small, just only like 30 pips, and the trading gods were good to us because it got to 22 pips. It didn't get to 30 pips, and then it gave up the ghost and is now breaking pretty badly to the downside. And so we don't know whether that's going to work either, because we don't know what the future is going to bring us, but nobody else does either. That's the real beauty of what we're looking at here. Tomorrow we're going to have, I believe, as our guest on the 22nd of September would be Mr. Shane Smolian, I believe. Hopefully that would be a good thing to listen to, because he's got some great information, on the COVID stuff, and then also on the other thing. I don't have any idea. All I know is that, the number of people that are dying here in Tucson has backed off quite a bit. There's still a few people getting sick, but I don't know if the end of this thing is over or not. I doubt if it is, because it's such a political event that they're not gonna stop beating the drum until after the election, and then everything will change just like it usually does. So we'll see what's looking at. The key level, folks, today is to watch the S&P at 32.95. That's the real thing to look at. Now, we didn't quite make a new low yet. 32. The old low was the 32.47. We're trading at 32.53. There was a nice ABCD there at that level. Let's see if we can show you, folks. 1 second here. I've got to change something so that just get rid of this and get it out of the way here. Hold on just a minute, and I want to get this up. Oh, shucks, this is not good. Give me 1 second, boys and girls. This is where I have little technical difficulties here, and I want to take this out, and I think we'll be okay. Now, there we go. You'll be able to see this ABCD that we have going in right now. And let's just draw it in so you'll be able to see it. And then you'll notice that's what we're watching here. And these the ABCs don't work all the time. You've got to remember that, folks. Sometimes they work, sometimes they don't, but they work more than they fail. And that's the key thing, to pay attention to as you're watching some of these stocks here. Question about the Treasury bonds, folks. I have to be bearish Treasury bonds. And the reason for that is that I don't believe we're going to negative interest rates. And people are, it's just amazing when you hear, I listen to Bloomberg early in the morning to get early indications. And my goodness, people talk like it's, like it's a foregone conclusion that everybody's going to go to negative interest rates. And I frankly think people are smarter than that. And that that's not really going to happen. But there's a lot of resistance in the bonds. At the 177 level. The high today has been, I believe, 177.04. So we're going to be watching some of those, and we'll see if that's going to mean anything. I need to double check something here to see what the prices are doing because we're at the opening indication now, and I want to see how the market handles the NASDAQ handles the new lows if we get there. And have we got there in the new low yet in the NASDAQ? We're really close. Yeah, we're within a heartbeat. The old low was at 08. Well, that's 40 points away. Yeah, we're 10,740. The old low was 10,708. The S&P just made a new low here. So that's the ABCD on that one. So we'll watch it. The gold is broken down to 19.17 has been the low. I posted the chart in there. You can see how bearish it's been. And folks, when I do these charts, if you belong to the 24/7, what you really should do is to look at what we predicted last week and what happened this week. It's really an amazing. This was brought to my attention by one of our listeners in Australia. The fact that futures section, he was, of course, he's a futures trader, but he said, my goodness, he said, your areas are just absolutely unbelievable. And all they are is just patterns along with the Fibonacci numbers. That's all we're looking at when we're watching these things. So that's why you want to pay attention to it. And when you got the people in the den like Z and Doodad and a lot of these other folks in there that know what they're doing, Duffy, Bob A, just Bill W, all these guys know what the heck they're doing, and they give you some really good ideas on trades, and that's why you want to get that information moving in your favor if you possibly can. So just remember, there's a lot of people here at TFNN that give a lot of great information, so that if you are interested in helping out, just go to www.tfnn and sign up for the Tiger's Den. You'll get some great information. 877-927-6648.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, folks, I want to take a second here and run through the FANG stocks because this was one of the keys that told us that we're probably going to be down sharply this week. You can see the large ABCD pattern in Netflix, that it makes a double top just below the 78% level, closing very badly again on Friday, not looking very good at all. If we take the next look at the next one, which is really important because Microsoft is going to be trading at, let's just get this up here so we can see it. Softy's going to be trading probably at the 382 today at 195, and if Microsoft starts going below 195, that's going to be a really interesting pattern to the downside because there's not much support under that. That's a really key one to look at. Apple has just been pretty much in a free fall for quite some time now, and it also, you'll notice here that we have a big ABCD here in Apple at the 103 level. I imagine Apple is below 103 right now. I don't know if it is or not, but if it gets below that, would really be looking at what we're watching. So anyway, well, the fact that AMD is green is good. If you can get a stock that's green in a day when everything's getting hit, that's an important. You don't want to mess with that stock. That's you want to buy the most expensive. So let's keep Apple. Apple's what did it get below 103? Maybe it didn't even make 103 because 103 was the ABCD target on the Apple. So that'll be interesting to see. 103, there you go. Well, the great things. So it got to 103. Well, that was an ABCD pattern. When did I do this? I did this Saturday. So I think that's the number. Yeah, 103.14 was the number. That's you can see it right there in the den. It's the ABCD comes in at 103.14. So, maybe these things work sometime. I don't know. Here's one that's also in deep trouble, and that is the possibility here is, it's now at 105, so it jumped a little bit. Anyway, look at Facebook. You see if Facebook, there's a gap there at the 250 level. So if we start getting below 245 in Facebook, that's going to be a situation that could be relatively dangerous. You know what I mean? So we'll see it. We'll have to watch it. Very, 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 very important. The old low in the NASDAQ was 10,708. I don't know if it took out that low or not. I haven't been able to double check that from there, but it's one of the things that that we have. Let's take a look at one other of these, and that another one that looks extremely negative is the Google. You'll see it's broken down from the big ABCD pattern that it made up there at 1720, and now we're at 1450. So these things have broken quite a bit. And the other thing, folks, that you got to remember, at the whole news is about the fact that these tech stocks cannot break. I mean, they literally tell you that every single day. All of these people that come on the news, and since there's nothing else to do but to watch a TFNN or CNN, CNBC, I listen to what these pundits are saying because they have an opinion just like everybody else, and that's the one thing that's all confirmity is the fact that the tech stocks are the way to go, and they probably are long term. But as you remember back in 2000 and also in 2008, when they give up, they can give up big time, and that's why pattern recognition is, I think, so very, very important. Another one that we need to watch that just completed a big ABCD here on Friday, the only one that's completed the bullish pattern, and that is Amazon at 29.50. I don't know if we got to, if Amazon got to, did Amazon get to 28.10 today? Can someone double check that for me? Because that's a really key level in Amazon to watch. I mean, it's 28.10 is a really big number in Amazon, because going below that, it's going to be pretty interesting. So we'll see what's going on. So, okay, let's move on here to one other one that I wanted to mention. Give me 1 second here, folks, and I'll get it up here. A couple of weeks ago, we had Stan Harley on talking about this Fibonacci cycle, and I believe that we've hit it. Like Apple's almost green on the day, so that's interesting. You'll notice here, this was the longer term. These are very, very long term. 89 years, 55 years, 34 years, but it's supposed to come in sometime between 2020 and 2021. And that may or may not be something. But I frankly, those are beyond my pay grade, folks. Long-term stuff is okay to look at, and it's interesting, and you can make some great, some ideas on it and stuff. But boy, you can't trade a weekly chart in the NASDAQ. Weekly, the NASDAQ moves $10,000 a week sometime. How do you put a $10,000 stop on something? That's pretty much what I look at. I mean, you really can't really do that. Yes, we're always having fun, Dudette, that's for sure. Okay, all right, let's move on here. Let's see how low the NASDAQ got here. I've got to check this because I am interested here in covering here. See, yep, we did. Did we make a new low? We made a new low in the NASDAQ by only 4 points, and we've already rallied 100 points. Now, how do you... Now that's a pretty wide run. The low was 10,704, and we're now 10,797. Moves 93 points in 5 minutes. So if you want to trade that, boys and girls, I wish you the best. But it's a little beyond this old cowboy's pay grade. I stay away from those. So we'll see what's happening here. Okay, let's move on here to the euro. We are trading at I'm looking at the December futures here because you can trade the futures as long as you don't trade more than 50 contracts, which is far away from what I usually do. But anyway, you can see here we're trading at 1.1782. I should mention about the December futures. The Chicago Mercantile Exchange, foreign exchange, is a contract. Okay, when you're trading foreign exchange at a Forex place, FXCM or something like that, you're trading against the bank itself, and they charge you a higher commission. They usually charge 1 or 2 pips. Well, that could be anywhere from $10 to $20 per trade, whereas you can trade at the Merc for $4 in and out. So it's a $4 in and out. When I traded as a member when I was back there, it cost me $2 in and $2 out. So you're getting the same value that I did as a floor trader, as a member of the exchange, owning the seat, that you can do now for almost nothing. And that's and not only that, you don't have to worry about out trades. That's another thing that you don't have to worry about. So those are things that are I want to get this up here to see where we are right now. I believe you can see here over the past several days why we were adding up there at that 108.85 level. Let's get this up here, and we'll be able to see it here. Okay, there we go. All right, there's what we're looking at right here. So that's what we're watching here, and we'll take a quick look at that. You can see here the ABC. The reason why this looks so interesting, folks, is because let me show you the longer-term chart here in the euro versus the U.S. dollar. This is the one that's really interesting, okay? You see how we've been here for a month? Actually 6 weeks. Since August the 10th, here we're in the 6th week right now. If we start getting below 117, oh my goodness, all of that up there was distribution, and we're looking at something that's going to take you down a lot. So that's why it's interesting here. Heck, who knows? 877-927-6648.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
Bam!
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I wanted to bring to your attention the price of silver because we just made a 61% retracement of the move. I'm not buying here. I'm just watching it. If you'll notice here, let's get this up here so you'll be able to see it. There's an ABCD structure taking you down another $1.30, which I think is what we're hoping for. Well, I hate to use that. It's not a good trading word, but I'm assuming that we're going to get down to $1,850 in the gold. That's down another $6,000. That would take us down to 24 and a quarter in the silver. The December silver is what I'm looking at here. That I think would be a very nice buy, but we are sitting right at the 61% retracement now at 25.75. We've taken out the lows of last week on the 8th. We took those out by about a dime. We haven't broken down very much. The low so far has been 25.65. So I don't believe this is the bottom, but I think we're getting close to it. I'm watching the gold also. Remember, our longer-term patterns in the gold are at 1845 to 1850, and also a possibility at 1810. I noticed that Facebook just broke the magical 250 level. We're trading at 244.35 now. So that's telling you that there's some problems at Facebook, potentially, and that's what we're looking at. The key word there is potentially. All righty, what other one? Oh, but tomorrow we will have Shane Smolian will be our guest. He's going to talk to us about what he's looking at as far as the predictive numbers in the COV thing, plus all the other things he's looking at with the Fed and all the things that are going on with the Fed and the fact that they're out here changing the rules of the game all the time. But that's what we're here for, is to trade the smaller time patterns and not risk very much, and do the best we can to get this information out to you as quickly as possible. And also, folks, if you get a minute here, we're breaking down now in silver is what we're looking for. So these are acting pretty nicely. The euro's acting nicely. The NASDAQ is doing well. So let's just keep our fingers crossed and see how these things unfold here. We've got some big things coming in all these commodities, folks, because these markets have had big moves. We're going to see corrections, and then we're going to see what they're going to be made of. So we'll see you all tomorrow on the flip side. Live every day in an attitude of gratitude, and may God bless.